All right, guys, welcome to TradeThirsty's morning market mixer. We're live for the whole of March, and it's going to be every day from Monday to Thursday, just for March. So for you guys that haven't met me yet, my name is Russell Barbour. I started trading in 2012 and began chasing a lot of penny stocks. It was in serious student loan debt, and I lost a lot of money chasing the market very quickly at market open. So that wasn't the best. I spent years over trading and oversizing and trying to be right. And these days I actually found a really mechanical, consistent system that really helps beat the market. And really I'm focusing on intraday SPY options, in particular zero DTE trading, using one quality setup per day with well-defined entries, exits, and strict risk management. So today I'll be looking at several platforms, the first being TradingView, which is an awesome platform, really the best platform out there for trading charts. If you guys haven't used it yet, definitely check it out. It's completely free and easy to use. For news and earnings, I use earningshub.com. For SPY levels, I use a mixture of my proprietary own levels and barchart.com. And there's also a cheat sheet that I want to share with you now at tradethirsty.com/MMM. So all you have to do to get that is to scan the QR code that's on your screen right now. I'm also pasting the link in the chat box here as well. It should be coming up right now. So the link for the cheat sheet is in the chat. Also, the QR code will give you access to it as well. Let's go through it really quick. It's just about zero DTE trading and a little overview of the strategy that I use to trade zero DTE. So zero DTE is obviously 0 days to expiration. And so this is trading intraday using options contracts that expire that same day. They do lose value pretty quickly as time goes past via theta decay. And so this means that you have to have precise timing, make sure you've got the direction of the market and the momentum correct, making sure you can do the trade pretty quickly, typically just a few minutes or maximum of an hour or so. We use breakout trades, trend continuation, reversal, volatility scalps. Because the contracts expire the same day, really small movements in SPY can create large percentage gains or losses. This can be attractive to some people, but it also increases the risk significantly when you're trading this style of trade. So basically, we want to look for things like the opening range. We want to look for VWAP, make sure that we know what's going on in the market, that there's no crazy news coming out, no earnings, anything like that, no economic data that we should be worried about, because that can help the trade go either way, whether it's against you or for you. And we want to trade because there's tight spreads and fast order execution. So potential benefits: lower upfront capital, higher leverage, fast moving contracts. You can have a very well-defined risk, because your premium that you pay for these zero DTE contracts is often pretty small, typically $100 or $200 for a contract on SPY. There's lots of frequent daily trade opportunities, which is awesome, but you do have to combat things like theta decay, large price swings and fast losses, and all this leads to emotional decision making under higher pressure than other trading strategies. So you got to be careful with DTE. Today we're going to go through the opening range breakout. We're going to look and see how that's doing this morning. I start preparing about half an hour before the market, before we go live here, and I may mark up the expected move and the opening range and start looking for a breakout to the upside or the downside. The advantage to this system is it works in any market, whether it's going up or going down. The only time it doesn't work is if we're just kind of going sideways in a nasty chop, sideways for any amount of time. And then around 10:05, 10:15, so around this time, start looking for that breakout outside the opening range. Sometimes it happens right now, sometimes it can take a little bit longer to get going. And I'll kind of look at that as we go on here. So we're only looking at very high probability setups. The setup is simple, but it's not easy to trade. You've got to have a few key characteristics. Things like the break and retest and continuation are really to look at, and not just a simple break outside of the range. And so we're going to be avoiding trading inside the middle of the opening range. We're going to skip trades if there's a large opening range. Today it's not. We'll look into just a little bit here. And we're going to use tight stops that are back inside the range to minimize, to maximize risk management, basically. So that's the cheat sheet. Basically, it's pretty straightforward. There's the basics on it. Let's go back to the slides here and continue into the market news and things for the day. First off, quick overview of the SPY for people that are maybe not that familiar with it. It's obviously an ETF. It tracks the S&P 500, which is 500 stocks across 11 sectors. So it's nice and diversified. It's one of the reasons I like trading it. You don't expose yourself to any crazy earnings news or individual stocks or tickers, any halts or anything like that. So it's nice to track that. It was the first ever US ETF listed back in 1993. And one of the main reasons I love trading it is because it's so liquid and easy to trade with cheap contracts as well. So it's always nice. All right, so today we're going to talk about the usual. So we're going to go through SPY ATM Alert. This is the premium service that I run. It basically is one trade a day at 10:30 a.m. Eastern time. So we're going to recap how that did on Thursday and Friday last week. We're going to look at the overnight market news, what happened over the weekend, how it's affecting the market. Look and see if there's any major earnings or any data to be worried about going forward today. We're going to look at the market direction using the opening range and VWAP. We're going to look at key intraday levels on SPY. We're going to look at the expected move, the volatility, and then see if there's any trade opportunities coming up later on today. So here's the recap for SPY ATM alerts. It's that daily trade at 10:30 Eastern time. Comes out every day, unless there's a stay, which it sometimes does. And yesterday, well, on Friday, Thursday was a winner. I've just put Friday up here. It's a put alert. SPY was at 668, which isn't too different from today. We're at 670 on SPY at the moment. The strike was the 669 puts for this particular trade, entry price of 220. So you get given all of this information. You get the entry price, the take profit, and the stop loss. And then basically you place an OCO order for the trade. And you can see on the right here that we bought puts at 9:30 or 30 Eastern time. I'm in Central, so if I say 9:30, I really mean 10:30. And so you can see that it actually did go up just a tiny bit, and then it went in our favor for the next 12 minutes or so, 10 or 12 minutes, continued down. But we basically take a chunk of the move. So we took a 20% in 20 minutes or 10 minutes on this particular trade. So it went really well. So very easy. All right, let's get into the news from overnight and the weekend and this morning. So this morning we had the Empire State Manufacturing Survey. It didn't move the market very much, but basically it's manufacturing activity in New York. It's often used as an early signal of US industrial demand, and it matters because strong numbers mean bullish sentiment for the broader market, and weak numbers often mean recession fears increase. So that's why it can affect the market. It didn't do much today at all. We were gapping up on for other reasons, and basically today is very light on data. In about 5 minutes, there is an industrial production release. The big news this week is going to be Wednesday. So we'll have to keep an eye out for that. Wednesday is going to be an interesting day for sure. And so today at 10:15, there's going to be the industrial production release. This is a key monthly report. It's an economic release from the Feds that measures the total output of the US industrial sector. Traders watch it because it gives an early outlook of economic momentum. It can move the market. So it's definitely something that we'll be watching in the next 5 minutes or so here to see if it moves the market. Large cap tech today is helping lift the market, so it's one of the reasons we're gapping up. That and some technical reasons as well, which we'll talk about in a little bit here. Meta is up pre-market and as the market opens, and that's around reports around cost cuts ties to AI spending. And if NVIDIA is also up. It's getting ahead of its GTC AI conference, where investors expect new AI hardware announcements. And Micron is also moving higher as well. So these things are potentially moving the market here to the upside as well. And so from a technical point of view, we'll look at the chart in just a minute here. Basically, every time we've gone to a lower low in this sell-off, so we've been selling off for a bit here, SPY's rebounded. And it did that over the last 2 months. There's always been a next day rebound in the market, and that's what we're seeing as well. So let's go and look at the SPY chart on the daily here. Just switch to Sky. Switch out here. And so like I was saying, we've had this sell-off that we've been in for a while. As I said before, it's kind of a choppy sell-off, but basically every time we have a lower low, we get a rebound the next day, and that's what's happening today as well on this green candle right here. So you can see we almost touched on Friday the 200-day, finally got down there. There's some support here at 652-ish, but we've rebounded nicely off, almost off the 200 SMA here, and we're heading back up towards the 100. So it's pretty significant sell-off, and it's not really showing any signs of stopping. I mean, this is still in this choppy downtrend, and with the conflicts in Iran and the general market sentiment, we could easily see a continued sell-off as we go on in the next few weeks. I'm fairly bearish on the market at the moment for obvious reasons. So yeah, so that's kind of an overview of the daily chart. Let's just switch back to the slides here really quickly. So I marked up the expected move in the opening range. VIX is at 2024 now, actually. So we look at what VIX has been doing, and then we'll look at the opening range. Just give the market a little bit of time here to settle down on the potential data out in a few minutes. So here's VIX. We have spiked multiple times over the last few years, and you can see that this one, we're kind of following the same sort of trend, right? This was a previous big spike. These were two that were a bit more recent at the end of 2025. We've had this big spike, and then we're selling back down on VIX as things calm down a little bit. And this is very characteristic of VIX, as we see these volatility spikes, and then as people start to calm down, VIX drops back down. So at the moment, we're still in a fearful situation, but not overly elevated like we were a week or two ago, where we hit the 30s on VIX. So that was pretty crazy. But we're actually doing a lot better now. So let's drop down to the 30-minute chart here. I'll show you what I marked up this morning, and that we look like we're getting an opening range breakout to the upside. So let's just switch down to the 30-minute. Here. Overall, I think it's going to be a bullish day. One of the reasons for that is that we've seen that bounce every time we've had one of the lower lows. We've seen a bounce back up the following day. So that's a potential history repeating itself. The other thing is we do have a tight opening range. It's about 0.44%. So that indicates a potential or more likely trend day. So that's where we're at the moment. We're at the top of the opening range here. We're just waiting for that announcement to come out in the next couple of minutes here. You can see we wicked over here. I've marked up the expected move as well. So the expected move is the two outer lines here. So this one up here, 73.4, and this one down here, around 666.3, right down here. Those were marked up about 15 minutes before we went live here. I found that to be a pretty good indicator for about half an hour to an hour after the session goes live, to be pretty well respected, and that's why I marked them up around that time. Obviously, it changes the day goes on, but basically, we're looking for just a quick trade, right? So I'm not going to trade more than an hour later, and so we can kind of expect the expected move to remain roughly the same. So we are flirting on the 5-minute here with the top of the opening range. You can see we're right up here. We've wicked across on that last candle. We opened below it here, though. And this is a very dangerous time to enter a trade because we do have an announcement in the next minute or so here. So this would be a very dangerous time, even if we were closing above the expected range here, to start entering a trade. Give it a little bit of time here. Just give this candle time to settle down, and also the news to come out. And see on the 1 minute how we look. So I'm going to add VWAP. We should be above VWAP. VWAP's the up down here, so we're above VWAP, looking good for a long. I'm going to add in the SRX levels that I like. So they're actually not loading today, I don't think. Nope, not loading today. Must be something wrong with the levels. It's okay, we don't need to use them for this. I'll figure that out later, what's going on with that. We can just use the 5 minute candle. So we do take a long here. We do have a nice pattern here on the 5 minute. If we do take a trade, I'm just looking at the contracts. It would be the calls on opening range. I'd be looking at the 671 calls for today, obviously. Just going to load them up in my active trader in case we get a close in the next 4 minutes or so above the top of the opening range. All right. Let's see. If we don't get a close in the next few minutes, it doesn't look like that data that is changing changing much here. But again, we're just wicking above that opening range. So just a reminder for people that just joined, go live Monday to Thursday for the entirety of March. This is for TradeThirsty's March Madness. The link is in the chat if you want to check out the cheat sheet that we use. Let's go back to the charts for a look here and see if we're getting that breakout, which it looks like we are. Share this tab. So this is starting to look a little more promising. 2 minutes left candle. This would be a potential opportunity to take an opening range breakout trade to the upside. I do like this kind of bull flag as well on the 5 minute where we had this flagpole and then we've got candles. So this is looking pretty promising. Let's give it another minute or so here. I want to see a close above this rather than just a wick. You see that previous candle did a wick as well. So this could be an opening range breakout trade if you guys are interested in that. I often wait for a retest though. I'll wait for this to come up, go back, retest it, and then enter. And it tends to be a much more reliable entry. Just 1 minute left on this candle. Good. There we go. See what happens on forward here. It's kind of indecision at the moment. So the sellers are stepping in there, pushing that back down. Okay, well, I think I'm going to leave that until we get a retest. So that might be in 10 minutes from now, might be in 5 minutes. I don't really know, but I'll probably wait for a retest on this going forward. All right, so yeah, we'll be doing this Monday to Thursday for the whole of March, and I'll see you guys tomorrow.